Good morning. Welcome to Stock Market Today for Wednesday, October 21st, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where I get a lot of the content for this show, as well as we give you daily stock ideas to consider. Those hit your inbox every trading day before the market opens. So U.S. equities finished higher in Tuesday's trading, but ended off the session highs. Energy, financials outperformed. Materials and healthcare lagged the broader tape. Consumer staples, the only sector to finish lower on the day. Treasuries were mostly weaker, with the curve continuing to steepen. The dollar was little changed against the yen and sterling, but weaker against the euro. Gold finished up 20 basis points. WTI crude settled up 1.6%, near the best levels of the day. And, a lot of back and forth as it relates to a stimulus deal. The deadline has come and gone, but the two sides are speaking. So we'll continue to see headlines in that regard. As we get to the desk this morning, futures are slightly higher, up about 10 basis points after Asian markets were mostly higher overnight. Hong Kong leading, China ended slightly lower. European markets are under pressure this morning, down over 1% across, on average. Treasuries are mostly weaker once again, with the curve continuing to steepen further. The dollar is lagging on the major crosses. Gold is up 30 basis points. Crude oil is down 1.3%. As we dive in to the structure of the main market ETFs here. So the stimulus deadline comes and goes, but the major ETFs are holding support, right? So all the back and forth, all the talk, it's enough to make your head spin sometimes. So that's why I think now more than ever, it's important to just be mindful of the key levels. We've been highlighting them, kind of broadened it out here a little bit as well. So near-term support for SPY is 340. We've been talking about it for a while. Ideal world, we hold that level and become oversold. Now, SPY and QQQ are nearing oversold conditions by our work. That's that overbought, oversold indicator that we use. For the Qs, they're holding 280. Then below that, near 260 is if should it break. The September highs for both the SPY and Q are resistance. IWM 160, the key level. Below that, it's kind of a big hit down to about the 140 mark, maybe 145. But February highs are resistance. So headlines back and forth, right? There's never been a time when, in my opinion, where it's been more important to be focused on your key levels. These levels might be different depending on your time frame, but for the most part, I think they're a good framework. We're going to see back and forth about stimulus. We're going to see the headlines about rising COVID cases and increased restrictions in certain parts of the U.S. as well as across Europe. And obviously, there's going to be back and forth as it relates to the election. So I think it's important to understand these dynamics in the market. I do think it's more important to be mindful of your key levels and have a framework going in. At the very least, being mindful of the key levels can make it so that you're not making an emotional decision. If you view, like ours, is that oversold while holding above support is an opportunity to become more aggressive, that's not a decision you have to make in the moment. You've already made it. At the same time, if we were to rally to the September highs and produce an overbought condition, that's resistance, and you've thought through how you're going to react and respond if those situations play out. You're not making that decision in the moment, which I think is really important. So keep the levels in mind and just be mindful that you're going to be reading the headlines. They're going to be there, and there's nothing we can do about that. Let's hit our market in a minute now. What are we writing about today? Well, despite all the talk, stocks remain listless in the near term, and that's a fact, right? We're holding above support, but we've kind of gone nowhere for the past week or so. So just back and forth trading, you can see it playing out as the headlines come and go. Sentiment is mixed and largely unchanged week over week. SPY and Qs, as I said, are nearing oversold position by our work. In my note today, I talk about a potential personality change in a theme of value with a momentum tilt. I identify an ETF in my note that speaks to that, the fact that it's actually beginning to outperform relative to SPY. That's what we call personality change, especially after a long period of underperformance. And as I said, futures do point to a higher open here today. Now let's dig in to the major indices from a power bar perspective. Green across the board, though, as I said, gave up early gains. Actually, the third day in a row where early strength was faded, and the majors closed near the low of the day. So the Dow adds 35 basis points, 2 to 5 bulls to bears there. S&P 500, 38 basis points, 130 to 79 bulls to bears in that camp. Remember, these ratios are the number of stocks in each of these ETFs that have bullish, neutral, or bearish ratings. NASDAQ was a slight underperformer, 24 to 12 bulls to bears. Small caps also a slight underperformer, but still solidly bullish from a ratio standpoint. Bonds downtick, sending yields higher. A lot of attention being paid to the treasury markets and what's happening with yields. I've been reading articles about a lot of people putting on the steepener trade, or at least being bearish the long end of the curve. That's actually something we've been talking about, shortening duration. We've been writing about that for clients since early June. Energy was the leading sector on the day, and it's one that I continue to be unexcited about, but it was up 1% plus yesterday, 3 to 7 bulls to bears there. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board, however, are mixed. Taking a look at our stock of the day now, Darden Restaurants, DRI, jumped out at me. As markets are nearing oversold conditions, some stocks are already there, and Darden jumped out at me because the rating recently turned bullish. So the 20-factor model that gives us our rating every day turned bullish for DRI. It's in a strong trend above the rising long-term trend line. Industry group, hotels, restaurants, and leisure is strong based on power bars, right? So if we look at that group and look at the number of bullish stocks and bearish stocks, it's tilted in favor of the bulls. So what I see here is a stock that just turned bullish. It's been an outperformer since August. We'd love to see this begin to reassert to the upside. It's oversold with bullish money flow. You got kind of a solid level to shoot against here. You call it $90 to $95 as near-term support. After this stock that looks like it's turned the corner, pulling back here a bit and holding above support in the $90 to $95 range. So I think that sets up a potential interesting opportunity in the name, featuring it as our bullish stock of the day in my note, featuring it here on the show. For those of you who are doing work and getting ideas ready on the long side, I think Darden deserves a spot on the list. So take a look at DRI, closed at 98.34, up 1.8% yesterday, solidly outperforming the broader tape. Let's take a look at our sector tracker now, movement of the last 5 days of trading. Industrials at the top of the list and green, along with utilities, green. Right now, I've said what I have to say about utilities. I'm trying to figure out what's driving that. Is it fear in the market, or is it fixed income investors seeing the back up in rates and kind of moving over to the utilities almost as a bond proxy or a bond replacement? I don't know the answer. The rest of the sectors are down over the last 5 days. Materials and fins outperforming, energy, healthcare, staples, and REITs middle of the road. And then your more offensive areas of the market have come under pressure of late: discretionary, tech, and comm services, which makes sense to some degree, especially in light of the backup in rates. I think that is potentially, all else being equal, rising rates has a more negative impact, in my opinion, on kind of high-flying growth stocks whose path to profitability, the runway to profitability, is a little bit longer. So if you think about, just kind of discounting cash flows further out in the future at a higher rate, that's going to have a negative impact on the stocks that are not yet profitable, with the promise of profitability down the line. So just something to keep in mind here. I wrote about that in my note to clients yesterday when we looked at the breakdown in TLT. Taking a look at our industry in focus now, semiconductor services. And those of you who are longtime listeners know that I pay a close attention to what the semiconductors are doing. Over the past 6 months, they've been an outperformer, right? And the market has largely been driven higher in that time frame. Beating the S&P by about 20%. Power bar ratio, which looks at future potential, is strong. 6 bulls, only 1 bear. It's currently ranked number 8 of 21 subsectors, moving up 1 slot over the past week. So some names that might warrant some additional attention: Corvo, very bullish. QRVO, Diodes, DIOD is bullish, and Micron, MU, is bullish. But the key for me as it relates to semiconductors is the relative strength. When semis are showing an increasing momentum in relative outperformance, that's generally positive for the market. Now, semis tend to lead, but it's generally a positive dynamic for the market. So what do I see here? I see XSD, semiconductor ETF, bullish, strong trend above that rising long-term trend line. We talked about the ratio, right? And this is what I'm looking at. Notice, right? Notice how in August, the intensity of outperformance began to lag. And then in September, we had that pullback in the market, right? S&P 500 down about 10%, you know, the Qs, you know, NASDAQ down about 12, 13%. And then subsequent to that, semis began to reassert to the upside in their relative strength, and the market began to rebound towards the third week of September. That was a key driver in my view back in that time frame that it made sense to start to think about redeploying capital. So we watch semis closely. Taking a look at what's trending now, yesterday's S&P 500 movers and shakers. General Motors up 6.75%. They're making an investment into an EV plant. APA up with the energy complex, up 6%. IQV earnings send that stock higher, 5.75%. Traveler, same thing. TRV higher by 5.6% following their earnings announcement. And then National Oil, well, Varco goes along for the ride in energy, moving higher by 5%. Nothing company specific to drive trading there. IBM earnings hit the tape, stock down 6.5%. Full disclosure, I do have a bearish position in IBM through long-term put options. That stock down following their earnings announcement. PM is a bearish name that lost 5.79% following their earnings report. SYF is a bullish stock that unfortunately went the wrong way, down 5% following their print. PXD on the tape, buying Parsley Energy. Investors take 4% out of the stock, and Lockheed Martin, LMT, down 3% on the heels of their earnings announcement. So in the midst of all the headlines that we're talking about at a bigger picture level, we're still in the heart of earnings season as well. So a lot of moving parts here. It really is an interesting time to be paying attention to what's going on in the markets. And let's kind of drill down on that now. Every Wednesday, we look at sentiment. In our note, we go into detail, you know, on a few different sentiment indicators that we pay attention to. For me, sentiment indicators that I watch most closely are a function of markets. I.e. tradable securities. I don't pay as much attention to surveys. I pay more attention to what's happening with prices and what's happening in the market. I think there's more value. This is me personally. I think there's more value in what investors are actually doing with their money rather than what they're saying in a survey. So that's why I pay closer attention to the market-based metrics as it relates to sentiment. And one of those that I look at here is the CBOE equity options put call ratio. I take a 13-day moving average to smooth out some of the noise, and you can see we remain in, you know, excess greed area, actually ticking down slightly week over week. And this has largely been a dynamic that's in play, you know, been in play through the summer and fall. Right, a little bit of back and forth, but still closer to the extremes that we've seen over the past 5 years. So options traders are bullish. At the same time, the VIX has ticked slightly higher, hovering around that 30 mark. We all know what's going on with the VIX curve as it relates to November and the election, but you know, remaining elevated as investors may be positioned, you know, via the VIX. Or via S&P options as opposed to individual stocks to have some defense in their portfolio. The VIX just kind of stubbornly hanging in this 25 to 30 area. So largely flat week over week, but you know, we want to pay attention to it so we can be aware of the changes as early as possible. The dollar is obviously one that we're paying close attention to as well. The dollar is breaking down here in the near term, losing the 50-day moving average after being unable to get above broken support that has turned resistance at the 94.5, 95 area. At the same time, notice that after becoming extremely oversold, the RSI was not able to become overbought on the rally attempt and is now moving back below 50. So that's an interesting dynamic at play here that bodes for the potential for further weakness in the dollar index. We want to pay close attention to that because risk assets, for the most part, have been inversely correlated with the dollar. So further weakness in the dollar could be an added tailwind to risk assets think equities, think precious metals and other commodities. So that's kind of interesting. And the one you're going to be reading a lot about today and hearing about is Bitcoin. I wanted to throw it up here just because there's a lot of chatter about the break through 12,000. I am Bitcoin bullish. I do hold a position. I do not trade it. But for me, I'm really not going to get as excited as everybody else until we're above 14,000. For right now, it looks to me, while holding above the moving averages, we're moving into a potential resistance zone while becoming overbought on the RSI. You're going to hear a lot about Bitcoin today breaking 12,000. I wanted to call it out and give you my views from someone who's actually bullish on the product. So that's it for today. Take us for a test drive. I'm with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.